Okay, it's Wednesday, February 22nd. This is an end of the day SPY recap. And today in the market, we end up with a bit of a two down continuation bar that followed through and took out the low of yesterday. We expected that after the big red bar, but didn't follow through all that much. But there were certainly good opportunities today. If you look at the chart, daily chart, this is now 1, 2, 3, 4 days down in a row. So there's definitely some exhaustion risk in play. And actually tomorrow, being with 2 days left to go in the week, this is a shortened week, it's actually a real interesting day about what might lie ahead in the market. And I can go over that in a second. First of all, you can see here, we have kind of a fair value gap between the low of this bar and the high of this bar. So if we start up tomorrow, we could be coming up to fill that. Should we start up tomorrow and the magnitude is the high of this bar, that also sets the week back to green. Even though we have, a negative week so far after 2 days, if we really get an up move tomorrow, we could be turning that back to green and turning this back into kind of a hammer bar. Again, not necessarily expecting that, but anything's possible. So when we look at today's bar, if we can start above the midpoint of today, tomorrow, and the pre-market range somewhere, starts out up, and we get a 2-up day, then we are looking at a potential move back up. But as long as we stay now, if we get that and we can't get up to that area and we can't turn the week green, then on Friday and or for the days into next week, that could be a great sell as well. So you got to kind of keep that in mind. Also, it's certainly possible we continue lower because we still have targets down here to this red line on the 2 down week. We took out this first target. This is our next target. And on the monthly chart, we are still, we've turned back to red with kind of a shooter looking bar. We're coming to the end of the month now. So the more and more that ends up red, the more and more likely you are to kind of follow through into March a little bit lower. So, there's two sides to the coin. That's the thing. It's kind of hard to predict. You have exhaustion risk to the downside, so that's why you might not get the strong downward move. But any failure to move up, then I would really get excited for the continuation to the downside. So that's kind of where things are at in terms of looking ahead, and we'll have to see how things open tomorrow. But given that we didn't follow through too much today, it is possible we have a little bit of a reversal, and we just have to see if we can, turn that week back to green, on some kind of strength. And if not, then we're just kind of broadening up a little higher, similar to what happened today, which I'll show you in a second, in order to eventually move lower. So today's price action, we were biased to the downside. I discussed how there was Fed, minutes being released at 1 o'clock, so therefore you might not get the follow through in the morning. And this was, I shot a video how I bought puts right here. You watch the open. You weren't going to buy. You're way below the midpoint of the prior day. The only way I would have really wanted to buy this day and expect some kind of reversal from yesterday would be, I guess, if I got some big green up that went above the pre-market high and then had like a 50% pullback and then buy the next push. Other than that, I wasn't going to buy any kind of green to the upside. I was looking for kind of the green to red move, got that. And then, I scaled out and took most of my profits down here at yesterday's low, which is the yellow line, and the pre-market low. And I discussed how that might be it for the day. Maybe you can hold on, but once it came up, that you kind of knew you weren't getting the follow through. And all the way through the Fed minutes, price just kind of slowly grinded higher. And then what it did was what price does, in an overall down condition. It a lot of times it will come up, take liquidity the upside, and then continue its downtrend. So there was really a good opportunity if you want, after the Fed minutes were announced and you saw the big reversal bar, to get short, and it ended up coming back to the lows of the day. So this was a secondary sell, an aggressive one, but given the context that you're below the midpoint of the prior day, given your overall, biases to the downside, that's the type of thing that you're looking for. You just kind of take out liquidity up here, you get the reversal, and then in this case, you expect it to come down to the bottom of the range, in this case all the way to the lows of the day. So really two good trade opportunities today to the short side. Tomorrow, we really want to see how things open and what happens. Are we going to get a little bit of a pause on this downtrend and a move back up? If so, how strong is that? If it's not strong, then, in the days ahead, we'll continue to watch for weakness kind of to end this month. red, and then look for follow through into March. So that's kind of what's developing here. But today, again, given the Fed minutes and given the fact that you expected at least a low of this day, your prior day, to be taken out, there was really a good opportunity for a kind of a base hit kind of trade early near the upper end of the pre-market range to at least take out the lows, and in this case, the pre-market lows. Then that secondary trade, that made a lot of sense just given the overall, bias to the downside. So we'll see what happens tomorrow.